Today, August 28th, the SEC has charged a US-based NFT collection for being a security. So I think this case is going to be incredibly important for US-based NFT projects altogether, but also just general NFT market sentiment, which we all know is at an all-time low and has been for many, many weeks. All right, so let's take a look at the SEC press release and the article that gives us the information about this new lawsuit, and let's break it down. So it says here, the SEC charges LA-based media and entertainment company Impact Theory for unregistered offerings of NFTs. A few important things to note: Impact Theory raised approximately $30 million from hundreds of investors, including investors across the United States. The order finds that Impact Theory encouraged potential investors to view the purchase of a founder's key as an investment into the business, stating that investors would profit from their purchases if Impact Theory was successful in their efforts. Among other things, Impact Theory emphasized that it was trying to build the next Disney, and if successful, it would deliver tremendous value to founders' key purchasers. The order finds that the NFTs offered and sold to investors were investment contracts and therefore securities. Accordingly, Impact Theory violated the federal securities laws by offering and selling these crypto asset securities to the public in an unregistered offering that was not otherwise exempt from registration. So I think that paragraph is going to be the most important when it comes to this specific article and this specific lawsuit. It looks like the way they framed their project, the way they did their marketing and had their messaging out there, it really did come across as, we're going to make our investors, we're going to make our holders money. And as we all know, a promise of financial return is a big no-no in the United States, and that is one of the big pillars of the Howey test that says whether something is a security or not. They go on to say, without admitting or denying the SEC's findings, Impact Theory agreed to a cease and desist order, finding that it violated registration provisions of the Securities Act of 1933 and ordering it to pay a combined total of $6.1 million in disgorgement and prejudgment interest and a civil penalty. The order also establishes a fair fund to return monies that injured investors paid to purchase the NFTs. Impact Theory agreed to destroy all founders' keys in its possession or control, publish notice of the order on its websites and social media channels, and eliminate any royalty that Impact Theory might otherwise receive from future secondary market transactions involving the founders' keys. So reading this further, it almost seems like without admitting fault, they have agreed to pay fines, put notices up on their websites, on their social medias, and have also agreed to destroy what they own in terms of the keys, refund investors, and no longer receive royalty fees from the marketplaces when people buy and sell their NFTs. So I do think to some degree, this case is going to have an impact on the rest of the NFT market in the United States. And we've seen that with the SEC and Ripple and what that did to the cryptocurrency market. Whether or not this case affects NFT floor prices across the board, I'm not too sure, but I do think depending on the messaging and the roadmaps and different founding NFT projects based in the United States, depending on what they said and the disclaimers they put in place and the things they sold, all of those things could affect and could potentially impact the future of these collections, depending on if the SEC decides to go after more. But I think it's important to note that the NFT technology is not inherently a security, and an NFT that is purely a digital collectible that has nothing really attached to it in terms of utility or value add is probably not a security either. I think when things get a little bit gray and you start to hear, you know, we're going to be the next Disney and that investors will be rewarded substantially, and this is the messaging they're pushing, that coupled with the fact that the founder of this collection was a public figure, it does kind of seem like the perfect opportunity and the perfect target for the SEC to go after. So we'll keep an eye on what happens to this case in the future, whether or not their agreement to put all those disclaimers on their websites and pay back the stuff and take and burn the keys and whatever else they plan on doing is the end of it and they wrap that all up remains to be seen. But regardless, let's now pivot to taking a look at NFT collections across the board with their floor prices and also their market caps and how much they are down from their all-time highs, and we can kind of just briefly discuss my thoughts around that. So CoinGecko actually aggregates all of the data when it comes to these top NFT collections, and you can actually see current floor price, obviously, but also total market cap. And how they do that is they just take the entire collection, the current floor price, times how many items are in that collection, and then it spits out the total market cap. And that's interesting because I think a couple of these collections are all very similar in terms of market cap, but also specifically the captain's market cap potentially could be even lower than what the coin launch is going to potentially be in the next few months. So what we can do is we can just briefly take a look at some of your favorite NFT collections. Right now, DeGod's floor price is sitting at 4.4 Ethereum with a market cap of 39,000 Ethereum or $65 million. We'll also briefly take a look at Azuki, currently sitting at 4.6 Ethereum floor price, the market cap of 46,000 Ethereum or about $76 million. We can also just briefly take a look at some of these charts. Man, I remember when this hit 32 ETH, that was absolutely insane. I sold way too early, could have made absolutely generational wealth, and now we're currently sitting at 4.6 or whatever. I think this is about 80% down from its all-time high. Obviously, when you take a look at these collections and you're seeing that, okay, Bored Apes or Mutant Apes or DeGods or Azuki or Captains is, 50, 60% down from its all-time high in terms of ETH value. In terms of USD value, almost all of these collections are down a whole lot worse, because when we were trading these NFTs for the most part in 2021, Ethereum was at a much higher valuation. It was at like $3,000, $4,000. But the one I am most interested in is Captains. And I think this is interesting because right now the floor price is at 3.7 ETH or about $6,000 with a market cap of around $62 million. And if you take a look at a bunch of other meme coins and crap coins that have come out recently, quite a few of these coins have a higher market cap than the current Captain's market cap. And if Memecoin launches and it's around $10 million, $20 million, $40 million, $50 million, whatever it is, I am very curious to see what this does to the Captain's floor price and what this does to the overall market cap of Captains. And is it going to be higher? Is it going to be lower? What is it going to do to the Captain's floor? Because Memecoin is attached to your Captains and they're essentially a bundle, is that going to boost the floor price of Captains if Memecoin does well? Or when the vesting period ends, is it going to dump? Very interesting. The airdrop could even be, half of this or all of this, depending on what market cap it opens out at. But for me, it's potentially saying that Captains may be slightly undervalued here, and potentially people are not willing to spend ETH on more NFTs, but just waiting for Memecoin to come out and they'll buy the coin itself. So to answer the title of this video, no, I don't think NFTs are dead. No, I don't think all NFTs are securities, but I do think investors are getting a lot smarter when it comes to when to buy NFTs and which NFTs to buy. And that overall just means lower volume, lower floor prices because supply and demand. And we'll kind of see what happens over the next 6, 12, 18 months. But my theory and my prediction is still very much the same. We do need a sustained crypto cycle bull run to pop off to where people make a bunch of money and that money trickles down from Bitcoin to ETH to altcoins to smaller altcoins to meme coins and crap coins to potentially NFTs. And that's when we'll start to see FOMO potentially come back into the NFT sector, and how that manifests is anyone's guess, but that is my best guess with the current data we have. So I hope you guys enjoyed this video. If you did, hit the like button, subscribe to this channel. It really does help me out so very much. Thank you guys so much for watching, and I will see you guys in the very next one. Peace.